So I lost around 2.51% in this stock. This is Indigo. So let us discuss what happened here. Did I make a mistake? If yes, then what was the mistake? How could I have corrected that or reduced my losses? I actually did limit my losses. My stop loss is 8%, but here I ended up booking 2.51% overall. I made I scaled down on my position as the stock was not going up in my favor. So this was a failed breakout. So let us discuss this, what happened here. First, let me remove this. First, let us look at why did I buy the stock in the first place. So first I bought on this day, which is 25th of July. So let me put so this is what I saw. Ignore this yellow line. That's my second purchase. So this is point 0.1. Let me draw the base for you. So this is 0.1. This is 0.2, 0.3, 0.4, and 0.5. As you know, I'm looking for minimum 4 points in the base. I'm also looking for minimum 10 candles in the base, which is 2 weeks of consolidation. So there are 2 corrections in this base, 5 points in the base, and 10 candles in this base. Okay, that meets my criteria. Moreover, look at the moving averages. The blue, the green, and the red. The 50 days above the 150 day, the 150 days above the 200 day. That's a nice uptrending stage 2 stock. Okay, those were the reasons I decided to get into the stock. So point number 3 was my initial buy point. So point number 3 is the high of this candle, which is 4452.30. So let us place a line there, 4452.30. So that's where I placed my order, 2.5% position size. If I remember, I think I put half of that position size, so 1.25%, because the buy point came in the blue zone, not the green zone. The green zone is the upper quarter of the base. The blue zone is the lower quarter of the base. So yes, I remember I put a half position size here because first, the buy point is in the blue zone. Second, I'm only getting 4 points. If the buy point is in the blue zone, I need at least 6 points, to give me that confidence. Moreover, if you see, majority of the price action is in the red zone, which is the lower half of the base. I prefer majority of the price action to be in the blue zone or the green zone. For example, look at this stock. See, I had bought it on this yellow line here. Okay, started to go up here. But see, after point 2, there is not a single candle which has closed in the red zone. Okay, that is what I want to see. But that did not happen here. See, majority of the price action is in the red zone. So that's not ideal. Just a second. So yes. And see, next day what happens. Next day it hits my yellow line, but it closes below the yellow line. Although the stock was up 1.29%, but you look at the volume is below average. This is the 50-day simple moving average of volume. So the volume is low. It has touched my order. It has filled my order. I have the shares, but it doesn't close above my buy price. So I sold half of the shares that I had bought. So now my position size is very tiny in this stock. Moving forward, it goes up. See, now it creates another buy point. See, 0.1, 0.2, 0.3, 0.4. Now it creates another buy point. So that's why at the high of this candle, I have drawn another yellow line. See, next day it triggers and my order gets filled. So my position size roughly in this stock is around 2% here, not more than that. I already sold half here. I sold another half here because the volume is low and there is no breakout here. So see, a good breakout stock is the one that comes right out of the gate. Like for example, It starts going up, it never looks back to the yellow line. Okay, never comes back to touch the yellow line again. That's a true breakout stock. But in this case, and this price action is not convincing. It touches the yellow line, fills my order, and then falls back. That is not what I expect. And moreover, there is low volume. So these are not good signs. Okay, so I sold half here, I sold half here, I bought some shares here, I bought some shares here. Overall position size, I think 2% roughly. And then see, look what happens. Again, doesn't follow through. Again, I sold half. Then by the time I sold here, I had already sold the stock 3 times, and that too half every time. So I said, okay, that's it. I'm going to give it some time. This is my stop loss, okay, which is the 8% stop loss. I said, okay, let the remaining shares go and hit the stop loss. Don't on anyways, my position size is very small. So if it comes down and then bounces back, okay, I get the benefit because I have some shares. But if it doesn't come back up, if it doesn't pull back, I will allow it to go to the red line, which is my stop loss. So I decided to wait 2, 3 candles and see whether it pulls back or not. And absolutely no sign. So by the time this candle came, I think I sold on this day or this day. I don't remember the exact day. But see how a breakout fails. Just because there is a base, just because you have a proper buy point, just because this company is the best airline company in India, doesn't mean that the stock will go up. Just because you buy a stock doesn't mean the stock will go up. There has to be strength. There has to be strength in terms of price action. There has to be strength in, you have to see volume, and there has to be some logical reasons why people should be buying the stock. See, the price hardly goes into the green zone. Okay, not a single candle has closed in the green zone. That's weakness. Okay, that is not a good sign. So I ended up selling somewhere here. So overall, if I look at my initial purchase, second purchase, initial selling, second selling, third selling, overall, if I combine all that, I ended up booking around 2.51% loss on a position size of 2.5% approximately. Okay. So that's a very tiny loss. But see, this is the way I am trying to limit my losses. If a position is not going in my favor, I'm continuously trying to reduce the position size so that my risk goes down. The price might go to the stop loss. That is not a problem. But if I allow the price to go to the stop loss with full position size, then I am booking 8%. But if I don't allow the stock to go to the red line, which is the stop loss, with a full position size, then I am automatically reducing my, or I'm automatically limiting my risk. So my style of limiting risk is not to move the stop loss, it's to reduce the position size itself. Okay, that is just my style. Some people, after they see this candle, maybe they move their stop loss to 4%. That's another way of doing it. I don't do it personally because I want to give the stock more room. Sometimes the stock might come down and then bounce back, and that it stages a next rally. Okay, so I want to give the stock that room, and if it doesn't perform, okay, I'm just scaling back, limiting my losses. So I hope you learned from this trade. We learn more from our mistakes. Okay, so take the trade, participate in the market. Unless you participate, you will never know practically how things work. Where should you enter? Where should you exit? You will never experience those emotions. So that is why I say even paper trading is something that I don't encourage. Go in with a small position size. Unless you put the trade, how will you learn? Okay. So that's Indigo for you. 2.51% loss on a position size of 2.5%. That's okay. No problem. If you have any questions or comments regarding this, please let me know. Thank you so much.